Hello traders, the title of the video is how to trade Fibonacci retracements with eyes wide open. Let's get started. We are on a monthly chart of CVR partners, Epic UAN, Uniform Alpha November. This is an American stock that belongs to the basic materials sector, agricultural inputs. And we want to talk about how to trade Fibonacci retracement with eyes wide open. So you may say, George, what do you mean by eyes wide open? Are we not allowed to blink at all? Or do we use something, to keep our eyes wide open all the time? Well, it's up to you, okay? So the reason why we are using the word eyes wide open is that we want to know exactly what's happening. We don't want to miss anything. That's the meaning of eyes wide open. Every detail, everything that is going on, we want to know and measure it because the Fibonacci retracement is a measuring tool. All right, it's for measurement. Okay, price goes down from A to B and rally to C. Now we want to know how much profit people have taken. Price goes up from A to B and then pull back to point C. We use Fibonacci retracement to measure how much profit investors have taken. So a 50% retracement means that after the prior bullish move, they have taken 50% profit. So it's a measuring tool. So keeping our eye wide open when we are using the measuring tool is to be able to analyze the data and be able to figure out exactly what is happening. Very often when traders are using the Fibonacci retracement, they just use it for measuring purposes only. And they miss sometimes, information that are displayed on the chart itself, all right? So in this tutorial, I want to show you how you can trade Fibonacci retracement with eyes wide open. So without too much blah 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 from my side, you'll notice that some stock, all right, we always be careful. The word I'm using always mean up to more than 70% of the time. They will always, so if you hear me talking about always, remember that it's 70% of the time, will always pull back to the 61.8% Fibonacci retracement. So their correction, if it goes up from A to B, from a support level to a resistance level, they start coming down. They will never go below that 61.8% Fibonacci retracement level. Those are what we call the bullish cow. So it's a kind of a characteristic for those type of financial instrument. In this tutorial, we are looking at the stock CVR partners. It has also a pattern that you need to know. That's why I'm saying to you, trading Fibonacci with eyes wide open. So a lot of traders may be trading this stock using Fibonacci, but they may not be aware of a pattern that is in place, a characteristic that this stock is displaying. Some stock, you may notice that they may always pull back to the 38.2% or 50% Fibonacci retracement level. All right, those are the characteristics for those type of stock. And some stock over the year, they have been doing the same thing all the time. Either 61.8% they are pulling back to, or 50%, and they never violate that rule. Some stock, after a trending phase, they will always come back to the starting point. So they are in fact consolidating. So they go out from A to B and then they come back to the starting point and then they do exactly the same thing over the year. So you want to know over the year what are the pattern, talking about Fibonacci retracement, a specific financial instrument is exhibiting. All right. So now let's begin the demonstration now. All right. So you can see, don't blink. All right. So price went up from here, so here we are, so went up, so now here we are, it's going down, so here it is going down, okay? It's going down, yes or no? So, okay, so price went down from A to B, all right? And then it rallied up to his zone, okay? The 61.8% level. So let me say it went above it a bit to 78%, even to 100% level. The reason why I would like to use this 61.8% level is because the price came to the starting point forming almost a double top. So because it went down from here to here, we don't want a retracement to go to the starting point. So that's why I'm choosing the 61.8% level. Some of them may say 78% level, but it's only one candlestick bar that touches the 78% level. So again, talking about the majority of the candlestick bar here, most of them were a little bit above the 61.8% level, but did not touch the 78% Fibonacci retracement level. Therefore, I'm giving it to the 61.8% group. That's it. So went down from A to B, went to 61.8% level. If you accept, so this is what we have noticed. So then it came down. Okay. So if it's going down from here, we want it to break below the prior low, this low here. Otherwise, it's not a strong bearish move. So must break this low. So here it is. It went down below it. Good. So price went down. This stock, CVR Partners, goes down from A to B and then rally into the zone of 61.8% level. There is a high probability that it will break below the prior low. So we have that first observation. Okay. Okay. Let's remove the lines. Okay. That's the first observation. We keep our eyes wide open without blinking, and we apply it this time to this price action here. So this time again, price went down. Careful, careful. From here, where my cursor is, to this point here. And then it rallied up to what? 50% Fibonacci retracement level. It couldn't touch the 61.8% level. But suppose our first observation is that we noted that the stock very often found a resistance in a zone of 61.8% Fibonacci retracement level. So at that point in time, because of our observation here, we will put a line there and say, okay, maybe it's going to come here. All right, you understand? We will say maybe it's going to come here. It came here. So the resistance was at 61.8% level after breaking below, after, okay, a move down. Now a move down and a rally begins. We will say there's a high chance that it will go to 61.8% level because of the previous reaction. So we put a line there. But talking about practical Fibonacci trading, you will quickly realize how the strategy will play very shortly, and I will explain it to you. Okay. Now this is 50%, but still below 50% zone, but still below the 61.8% level. We want to be sellers below the 61.8% level. So our strategy is still valid because we have noted that the stock, after a move down, rally into the 61.8% level. We are giving priority to bearish signal below the 61.8% level. So this is again a valid setup for us because it's below the 61.8% Fibonacci retracement level after a move down. Okay, let's see one more time whether this strategy can stand the heat of the financial market. So here again it went down. Okay, here again it went down. Okay, from here. So we're talking about this move down to here. So our strategy is what? Is that there is a high chance that this stock will come to which level? 61.8% level, and we want to be sellers below that level. So our horizontal line is placed there as the rally begins here. Look where? 61.8% level. Can you see a pattern being developing for this stock? Can you see that there is a pattern, all right? A characteristic that is in play for this stock? So again, here, as we saw it here, we will say, anytime this stock rally up to the 61.8% zone or near that zone, or we sell below it after a move down, it usually break below the prior low. It did it here, it break below the prior low. So as we see here, is that we say there is a pattern, there is a high chance that it will break this low, this one here. So now we are here. We are sellers below 61.8% because we keep our eyes wide open. We did not miss any opportunity. We know that there is a characteristic for this stock and it's doing something. If it's doing it, okay, we see it happening, we take advantage of it. So here again, people are selling. You have observed what has been going on, and you will say there is a high chance. Not that you say that definitely. It's not about definitely. We are talking about probability, high chance that it will break below the prior low. And it did it again. All right. So will you say to me that it will be better to use the Fibonacci retracement with eyes wide open? So this is one example to show you how one can trade Fibonacci retracement with eyes wide open. Instead of using the Fibonacci retracement as a measuring tool alone, one can also look for pattern and a behavior, a specific behavior of a financial instrument. So I invite you now to go to Google, Apple stock chart and see whether you can see a pattern, all right, and play with a lot of stock, and you will see some stock are doing almost the same thing all the time. It's not the stock itself, it's the behavior of traders that are trading that financial instrument. So there is a group of traders out there that are trading stock, and they are doing exactly the same strategy over and over, selling it anytime it goes down. Goes to 61.8%, they are sellers. All right, and you will see some stock, it goes out from A to B, pull back to 61.8% or 50%, you go back up and break the prior high. So the opposite is also true, though I'm talking about a bullish example here. It's also true when we are in an uptrend, price pull back to 61%, a stock may exhibit a specific pattern, and that pattern may be okay going on all the time, or maybe fractal, okay, on the same time frame as you can see here. All right, so it goes down. Okay, you see, you see the pattern now. Okay, so it goes down from here to here, again 61 point. So one more time, let's try this one, and then we wrap it up. Okay. Okay, so price went down from here to here. So our strategy is what? We want to be sellers below the 61.8% level because of what has happened before. Again, it changed direction, and this time it's stuck here. So it's no 100% or guarantee, but we are talking about high probability that it will break below the prior low, and this time it did not. Another thing, talking about how to trade this strategy, once you know that, you say, okay, there is a pattern in place, so all right, this stock is rally up, it's a 61.8%, usually the limit. We put our line there, but pay attention here. Pay attention to the candlestick bar in that zone. There you see this is a bearish candlestick pattern, and here bearish candlestick pattern, bearish candlestick pattern. Here it is an inverted hammer, okay, followed by this one piercing through a key level. I talked about this strategy when I was talking about candlestick pattern, an inverted hammer piercing through a specific key level. This is a bearish pattern here, a bearish candlestick pattern. All right, so this is the end of this tutorial about how to trade, okay, Fibonacci retracement with eyes wide open. Okay, talking about specific, okay, pattern that stocks will exhibit or financial instruments will exhibit over the year. Talking about the Fibonacci retracement and talking about a rally or a pullback, we can keep our eyes wide open and identify exactly which pattern is going on and take advantage of it if it's taking place in the future. The mistake will be to assume that definitely what has happened before will happen again, but all we are saying that there is a high chance it will happen again, and we take advantage of it gently, looking for trading setup, candlestick pattern, and then we use the top-down trading method to trade it. So now I leave it to you. Go and look at different chart and see over the year if there is a pattern in place. But now you have to, okay, polish that strategy. So you're learning now, okay, it's raw material, you know, you understand it. Now you have to practice until you master this strategy. It's not like a plug and play. All right? All right, if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about how to trade Fibonacci retracement with eyes wide open. Until the next time, enjoy yourself and be very happy. Speak to you soon.